Oh, what's up, homies? Welcome back to my office. My name is Matt Lurker, and I know everyone has been trying to pitch to you about how good the housing market is right now, but I'm here to tell you it's not. And it could be the right time for some people if the deal is right, but odds are if you're watching this video right now, then you should not be buying a home in 2021. Before I get into all that and tell you why you shouldn't be buying a home this year, smash that like button for me and let's get started. For nearly all of time, home ownership in the United States has been the pinnacle of the American dream. People for years have been fantasizing about their single family home out in the suburbs with their white picket fence out front. And it even used to be common for families to be able to buy a home off of just one salary. One parent would go off to work, the other parent would stay home with the kids, but these days are pretty much over. Unless you're like an investment banker making $250,000 a year or in some other very high paying job, it's really improbable that you're going to be able to afford a home and a family and kids and be able to take care of all of them off of just one salary. And there's a few reasons why things have changed, but like it or not, homes are just downright expensive. Housing right now is crazy expensive for a number of reasons. And if you want to learn more about that and how we got to this point, I've already got another video out that goes into more detail on that subject. So I'll put a link in the description if you want to learn more about that. Regardless of how we got here though, unless the deal is just amazing, you probably shouldn't be buying a home right now. Here's why. I'm not going to beat around the bush and make you wait till the end of the video just to hear something valuable, so here it is. The median home price in the United States is actually declining. And I know some of you are already upset with me because the market in your area is still on fire, but keep in mind this is an average, it's a broad index across the United States, but the median home price on average is declining. I know some markets are still hot, but keep in mind that that can't and won't last forever. I'm not just making this up though, so I can be clickbaity in my title. Maybe I was a little clickbaity, maybe I wasn't, but the fact is home prices are declining. I'm not just making this up though. As a nerd for economics, I like to pull my data straight from the source. And according to the Federal Reserve Economic Data, or FRED, the price of a home in the United States is currently trending downward from a high of $403,900. Granted, if you look at the data, the peak of the housing market was in the fourth quarter of last year, and now after finishing the first quarter of this year, the median home price is only down $300. This may not look like a big deal to some, and it may not even be a noticeable difference yet, but as far as I can tell, no one is talking about this. I've looked for articles, I've tried reading other studies on this, I checked all the major finance channels on YouTube to see if anyone else was talking about this, and I found nothing. And yeah, there are plenty of videos out there that speculate about what's going to happen in the real estate market over the next year. But we already have the data from the Federal Reserve about what's happening right now, and these changes are already taking place in the market. So what should you even do about it? First, subscribe to my channel for more insider news about this and other finance subjects. I'm trying to help you out here. Before we go into what to actually do about it, here are my predictions. There's a saying that's more common in stocks than in real estate, but it still applies. Buy the rumor, sell the news. Or in other words, when something is white hot, it's time to get out. You got in before the flames really started to build, you had a good run, but now it's time to sell before the stock tanks. And that definitely applies more to stocks, but it still has some relevance when talking about real estate. Inflation is at the forefront of everybody's mind. And it's going to continue to take up the headlines while home prices continue to drop in the background over the next 6 months. We're about halfway through the year right now, and I expect us to see inflation for the rest of the year. And it won't be anything close to like hyperinflation, like in Zimbabwe or Venezuela. It'll just be a manageable 2 to 4%, a healthy amount. In response to our normal and healthy amount of inflation though, people are going to freak out. You'll see a lot of scary headlines, and in response to that, the Federal Reserve will slowly raise interest rates, bringing with it mortgage rates. Now, there's an old saying in the real estate world that says for every 1% increase in mortgage rates, home prices drop by 10%. And Taylor Marr, the lead economist at the real estate brokerage firm Redfin, agrees with me here. In his own words, he said prices can't keep going up forever, even when the fundamentals are sustainable like they are now. Strong increases in mortgage rates, which are likely coming soon, will inevitably cool home appreciation and bring prices back in line with wages. And that brings me to my next point. Wages, on average, have not risen at the same pace that home prices have. In fact, the Bureau of Labor estimates that for the rest of the year, wage growth may be negative. Businesses across the country have been struggling to stay afloat. And we lost a lot of businesses last year too. It sucks to see this happening, but it makes sense that if a business isn't making money and if they're not growing, then they probably can't afford to give their current employees pay increases. They also probably will be offering less money up front to new employees that they hire. This will severely impact demand for a new home. If less people are in a position where they can save money for a down payment, then that's going to decrease the demand for a new house. And I know that there have been shortages in building materials that has also helped to increase the prices of homes for the past year. However, more people are getting back to work, businesses are reopening, and I don't think that we're going to be seeing those same supply chain shortages affecting home prices for much longer. So to recap, the Fed will be raising interest rates this year in response to inflation, which will decrease the demand for new homes. Wages are not keeping up with the rate of inflation, and we may even see negative wage growth this year, again impacting the demand for real estate. Businesses are catching up to demand, and supply chain shortages are starting to be resolved. And lastly, we already have economic data that shows a downward trend in the real estate market for 2021. All of these factors are creating the perfect storm for a real estate market correction. Not a crash, but a correction across the board to more sustainable and healthy levels in the market. So if you've bought a home recently, I'm sorry, but you'll just have to ride it out. Really though, this shouldn't be a huge issue because a home is a long-term purchase. You're going to be paying this off for a long time, and it's really not going to matter if the value of it fluctuates a little bit in the short run. So as long as you made the right decision and you were thoughtful when you were planning on buying that home, and as long as you're going to be holding this asset for a long time, it really won't affect you. For everyone else though, if you're thinking about buying a home right now, wait. The worst thing you can do is lock yourself into buying this home at an inflated price and then having to pay that off for 30 years, when you could just wait 6 months and get it for cheaper. Just by following the 1% rule from earlier means that if the Fed decides to raise interest rates by 1%, then your $400,000 home that you just bought has suddenly dropped $40,000 overnight. And it's unlikely that the Fed will raise interest rates by an entire percentage point right away. But in the first quarter of 2021, the US economy grew 6.4%, so it's not out of the question for them. In my opinion though, and keep in mind, I'm just some guy on the internet, but I think the best thing to do right now is just wait it out. If you have the means to just keep saving until next year, get a bigger down payment, and then buy next year. If you have time on your side, stay in your crappy apartment for another year while you save money. It would be much better, in my opinion, to give yourself the luxury of being a buyer in a much more affordable market next year. I really believe, and top economists also are saying, that the housing market in the United States is probably going to cool off through 2022. So I'm waiting. Let me know what you're doing, but I think it'd be much better to be in a more comfortable buyer's market next year, rather than getting into a home right now and immediately losing value over the next few months. Anyway, though, let me know how the market's doing in your area. I'd love to hear someone else's thoughts about it and your personal experience on either buying a home recently or maybe waiting to buy a home. Either way, I love you guys, and I'll see you next time.